Hello, this is Cryptolyze. I hope you are well this Saturday, October 14, 2023. We meet today to talk BTC, to talk crypto. We will do a weekly update. And yes, this will not be the video on the Bitcoin narrative. That will be tomorrow at 8:30. For what? Because the SEC will not appeal the court decision regarding Grayscale. And that's important. There are a lot of changes compared to what we said. And above all, a lot of things that are currently being said on Twitter, on the comments, and I think it's important to take stock of all that, and we'll start right away. And I remind you that you have the educational course which is available for free, which is training of more than 60 hours, 130 videos, 400 pages of guides to teach you crypto, blockchain, trading, technical analysis, investment through videos, tests, everything to be able to progress. It's available for free if you get financed by our partner. Everything is in description and comment. We will start by recalling exactly what GBTC is. So GBTC is the Grayscale trust in which there are 6 lock BTC. People buy shares of this trust in which Grayscale will buy BTC, but behind, if I want to get rid of my share, I have to sell it to someone. I cannot dissolve it to execute a sale of BTC. It is impossible. And precisely, the problem with GBTC is that they want to switch to an ETF, or in any case a format which is almost identical, which allows precisely this modification. That is to say, if I ever want, I can dissolve my shares and therefore the BTC will be sold behind. And that makes it possible to avoid having a secondary market in which we have liquidity problems or we have premium and discount problems. And that's really important, and they have asked several times over the last 3 years, 2.5 years or so, to switch to an ETF, and it has always been refused by the SEC basically. For various reasons, and precisely, GBTC less than 6 months ago attacked the SEC saying, "But it's not possible. The rejection conditions that you systematically impose on us, they are not legitimate," and that it was recorded by the judge that, in fact, they are not legitimate. And precisely the SEC will not appeal this court decision. That is to say that they admit the fact that, in fact, the refusals which were made are not legitimate. And that is very important in relation to the position of the SEC and the impacts that we will have on all cryptos, and in particular all of the BTC ETFs which are arriving, and we will have them when even a tripe. When we look here, we have ARK, we will have HighShare, which is BlackRock, we will have Bitwise, we will have VanEck, we will have Valkyrie. Well, overall, there are still many who are present with the dates that are present there. So I would just like to make a quick point beforehand to clarify for you a little bit everything that's going on Twitter and in the comments. No, that doesn't mean that Grayscale is validated. No, that doesn't mean the SEC is obligated to validate. And we really have to take a step back because it's something we see a lot on Twitter. No, it is wrong. It's just that behind it, Grayscale will be able to refile a new file in which the SEC will be able to establish whether, yes or no, they will accept this ETF, and that is very important because that means that we will have a refusal or a delay which can be justified. Otherwise, do not take the simplification of the idea by saying that given that they are not appealing, that means that they will validate. Absolutely not that. We are very, very far from that. This simply means that Grayscale can repropose and therefore re-enter a cycle where we can make 1 postponement, 2 postponements, 3 postponements, 4 postponements, 5 postponements. Well, in any case, final decision. So it's relatively far away, and in any case, they will always find strong elements to be able to refuse if they wish to refuse. And that, there is no obligation for validation. And that is why behind, when we look at the BTC level, we had a small acceleration. But overall, it fell back very quickly, because that we know very well, despite the communications we are currently seeing, that it has no impact, and it will not have an impact. And precisely, what will change this news? What does this change compared to other ETFs? Overall, absolutely nothing. It's just that Grayscale is now at the same level as other ETFs, in which they are going to make a new deposit. This new deposit will be studied, in which we have a first decision which should be ruled in January for ARK and all the rest. Namely that ARK will be the last decision. So there is a good chance that it will be refused. And if it is refused, what will happen? ARK will modify its request, will make a new request, which should arrive with validation potentially in March. And again, it is not said that it will be validated in March. If it turns out it will be refused, the whole thing in January for people to refile, taking into consideration the modifications requested by the SEC, and we start again once, twice, 3 times, 4 times. This is a game that can last a long time, okay? Well, afterwards, it is sure and certain that at some point there will be, as we have seen with Grayscale, lawsuits for precisely abusive non-validation clause, abusive refusal, rather, and on that we will have pressure put on the SEC. But don't forget that the SEC currently has an anti-crypto policy because behind it, we have an administration that is anti-crypto. And that could change with the elections in 2024. And so certainly we're going to hang around until then, and that's kind of the idea I have. Am I telling myself that we are going to absolutely validate this in March? I tell myself no. There is no obligation. It could be a probability. Is this going to be the case? Yeah, to see. Personally, I tend to tell you that the SEC is not ready to validate this as it stands, and it is certain that if we also arrive at a schematic of recession, or in any case of a banking crisis, it will not happen that there will be validation of ETFs. It is certain we will not give a way out to liquidity by saying, go for an asset that is decentralized. No, it won't work, and it's sure and certain. So for me, you have to take a little step back. It's not the great news. This is good news, but it doesn't change much. And I know that we are very bored at the moment with a course which is relatively flat with elements of fear which are very strong, whether it is with the war, whether it is simply with this fear of American recession. That we have certain analysts who are revitalized by saying, all things considered, the soft landing, we will perhaps get there. Whereas there is not so long ago, 6 months ago, people were all saying we're going to be in a hard landing. And it's interesting to see that everyone is turning their shirt around. So we are in a process which is still in a very complicated form of uncertainty. And precisely this uncertainty we feel even more when we has elements endogenous to crypto in which we want to cling. We just have to remain factual. Take a step back from our emotions to factually analyze what is happening. So clearly we're going to come back to the weekly closing in which we still have quite a few things, all in all. Where we had a big acceleration this week with the SPF 500 in which we went to do our retest, and we reduced more than 50% of the candle, okay? So here we have a first signal to potentially say that we are in a bearish continuation. Target still 4,100. For me, it remains the same. We closed above the RSI 50, which is rather positive. I expect that we will close below. So that is to say that we have a very strong form of resilience, although we have the surge in oil which is heading towards our retest zone. It's important because here we had fear, the non-reaction of oil in relation to the clashes between Israel and Hamas, in which here we had almost no reaction, or even a bearish reaction in which we filled the gap, and then a bullish reaction. But what is interesting to see is that also when we generally have elements which are as strong and as striking in geopolitics, we always have a small gap between the bullish reaction or not, and for me, the difference will play out in the retest. Are we really going to have a classic retest for bearish continuity? Which personally I tend to tell you that I wish, very sincerely, and that we do not have a breakout and a consolidation below. Because above, if we ever accelerate, there we will have a signal which will not be good with an acceleration of the price to retest the 105, or even much higher. And there, we will certainly have a structural inflation policy which will be relatively strong. On the other hand, if we are indeed in a form of retest for a bearish continuity, with behind a geopolitics which remains as is and which does not ignite, in which we still have a communication which is very strong, I want to say we have a desire to create a really strong fear at the level of the different elements, whether geopolitical, whether economic, and precisely we find ourselves in this dynamic, so we have to take a step back and not be afraid of this type of situation and just stay factual about what you see. So for me, I think that next week, we will have an answer in terms of oil, which will also give us an answer in terms of inflation. And obviously it will affect this end of the year in which we still have a weekly closing on the CME. We will move on to the CME straight away, which is rather negative here, in which we completely swallowed the previous candle, and we closed below the previous candle. So there we really have a sign of continuity bearish to go and retest the 25,000. This is something that I have already alerted you to for some time. So for me, we are still in this big range phase, which is between 25,000, 30,000, 32,000. That doesn't change. We're going a little bit lower, 31,000, with bits of liquidity here. But here we're really going to work on 25,000 whatever happens. If we take a little step back again, this time on a weekly basis, but by putting an indicator called the stock to flow rainbow indicator. This is an indicator for those who are already used to it from the previous cycle. which we see a lot. The principle of this indicator is the relationship between the generation of BTC and precisely supply and demand, okay? That is to say that the supply is generated mainly by mining and therefore the halving halves, the supply of new bitcoins, okay? It's not the general supply available, it's the production supply, and behind it the demand, therefore the number of people who want it, and behind it we will find ourselves in an idea of representation, here mathematical, with precisely a line which will be in the middle. When we arrive in the upper parts, generally it is the top of the cycle. In the lower parts it is the bottom of the cycle. And we have a representation of colors with a date, the halving. When we are here in these dates, it is because we are moving away from the halving date, therefore from the next halving. And when we arrive in the red, that is when we generally get closer to the halving. And when we look a little at the situation we are in, and that's why I like this indicator because it avoids having to systematically count the number of days we are in, very quickly we can look at the fractality by looking, okay, well here I am in the beginning of dark red. And we see that we are heading here in this area. Fractality has its advantages and disadvantages. That is to say that we will have an advantage where we can look in the cycles where we find ourselves. Disadvantages. That is to say that we say to ourselves that I have a few cycles, I don't have enough to determine something statistically viable. But on the other hand, what is really important for me is that yes, the cycles, we don't have enough for the mathematical part. On the other hand, in terms of emotion, it is identical. That is to say that in cycles, we always have these phases of euphoria, these phases of depression, and these phases of lethargy. And it's interesting to see what time period we're in, because these are areas where we felt the same way. And the people who were in those times felt the same way. And so obviously, the actions are more or less substantially identical. And if we go with the idea that the representation of the price action is the representation of the emotions of the people who act according to the price, we are really in the idea, okay, at that moment, the people are approximately in the same reactions and the same emotions, so we can assume that we will have a reaction which can be approximately identical. That's why I'm telling you that fractality has an interest when we understand it, and when we analyze this fractality in relation to the emotion, really, of what we experience. And clearly here we find ourselves in this approach where we had a rebound acceleration phase following a bearish breakout. Exactly what we had there, except that there, it was much more marked. But that prevents us from having it here, and a phase of lethargy which is heading towards a bearish phase. And it is exactly this fear that we have there, with the support of the 25,000, the support of the 22,000, and I give you the CME, support that we retest, reload zone that we have had for some time between 22,000 and 19,000. And when we look at that, this candle there, this acceleration candle, it's the candle which really gave the very strong momentum in which we had really a lot of volume, and it's a zone that which we call imbalance. So it is an area of demand which has not been retested. And at a given moment, technically, we tend to retest these parts very strongly. And we are precisely in this idea where we say to ourselves, okay, fractality tells us that potentially, yes, we can have a bearish acceleration. So there it was, mainly the COVID. But when we look at the basics, we have still also a small bearish inclination. Is the inclination we made there sufficient? Maybe not. Could we go lower? Yes, we could look for this reload zone in particular, in which we also have a CME gap to fill. We are in a classic compression here at the RSI level. Well, that just confirms this area, just with this reflection already, without talking about the notion of news that arrives, the notion of psychological impact that we can have. In any case, understand that we are now in a range, and it is not because we break this range here from the bottom to go and retest that would invalidate the bullish action that we has had 2023 since the beginning. It's just a form of retesting, restructuring, going to fill part of the imbalance, going to reload in an area of significant volume before leaving again. It's quite simply the liquidity model classic that we find at the course level. And I will end with two things. First thing, it will be the total market cap, which includes all the cryptos. We have, yes, an area which is potentially heading towards a bearish break to go and retest the game from imbalance which is located here, which would also correspond to what we saw on BTC. We don't forget that we have a dominance of BTC which has gone back above 50%, so it is mainly pushed and carried by BTC. But when I look at something else, which is the total 3, which represents all cryptos outside of Ethereum and BTC, what do I see? I see something that is still much less bullish with a direction towards a break of previous lots. And therefore here we could have altcoins which will bleed very strongly, while we can have a total market cap, which would be just in a structured retracement classic, and go again. So for me, we are in a really interesting area because quite simply we will quickly have an answer here when we look on the maintenance of the 25,000, on which we could make a rebound to return to the top of put away quietly and zone out this part, or see the 25,000 really break, with not necessarily positive news, notably on the SP 500 and on the US oil, in which we would lead to a retracement. Here, Q1 2024, that's exactly what I explained to you. Already for some time before being able to make a small accumulation of the chest and leave. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy. And we'll meet again tomorrow morning at 8:30 to talk about the narratives on BTC because things are moving a lot in terms of development. The price does not change, but the development changes enormously. And we're going to ask ourselves the question, couldn't this be the next narrative of the next bull run? Precisely the construction of smart contracts and everything that is developing around BTC. Could that eclipse Ethereum or not? The answer is tomorrow morning, 8:30.